Well, I don't know if it's just because of the election, and hi everyone. Thank you for having me on here again. I think there's certain key market drivers. I would say three. Obviously, as the vote count progresses, I think markets are pricing in the fact that we'll likely have a divided government. If that's the case, then tax and regulatory overhaul is off the table. Is kind of unlikely. I think we've had better than expected unemployment data. And, I think there's expectations based on Senate Majority Leader Mitch McConnell's comments yesterday that we will see potentially a fiscal stimulus package before the end of the year. So I think these are all drivers. But the big elephant in the room was when you open up the newspaper today and saw that the U.S. hit was record daily coronavirus infections. So, yes, we've got lots of good news out there, good earnings data as well. But I think the virus is sort of creeping in. And we're seeing it today with the mixed messages almost that the market is indicating here.
Here's what I don't get about the market reaction, Barb. Going into the election, the market was rallying big time on this idea of a blue wave because it was excited about a huge stimulus and the fact that we would get a decisive result. It doesn't look like we're going to get either of those two things, and the market is celebrating nonetheless. Why?
Well, I think there's a couple things. One, I think the uncertainty of the election and the flip-flop from blue wave to maybe divided government to still not knowing, is really, we know the market hates uncertainty. So I think, and we've had this rotation among groups in anticipation. But I think, we are going to see the market has raced ahead because their fundamentals to the bull market are still intact. The recovery is continuing to happen. And as you know, I still think it will be slower than it could be. You've got fiscal stimulus coming, and we've heard in the Senate leadership today that they think that it can be done by year end. And year end is when a lot of unemployment benefits roll off. So you have the Fed, you have fiscal stimulus, and of course there's the hope of the vaccine, which possibly comes out in the first quarter, which frankly I don't think is the saving grace. It will help the market psychology. But I still think if you look at some of the Asian countries or New Zealand, Australia, they've done a remarkable job controlling it without a vaccine. So we really need to control it with this standard, CDC recommendations. And Biden will be pushing that if he indeed is our next president.
Angela, what's your take as to whether yields will be rising or falling over the next 12 months? And how does that inform your sector positioning in the U.S.?
Well, I think in terms of yields, we saw yields kicking up a little bit today. I think our view long-term, interest rates are going to stay lower for longer, as Fed Chair Powell keeps telling us. I think that's going to be constructive for some risk-on positioning, whether we look at cyclicals, areas like healthcare. I think there's less concern about regulatory constraints and also is looking kind of cheap. I think areas that we also really like is this focus on sort of sustainability-linked themes. So we like investing in things like energy efficiency and renewable energy and smart mobility. I think these are interesting things. And if there is a blue wave, I think there'll be additional tailwind from a climate package, $2 trillion climate package that President Biden has been talking about.
Shepard Smith here. Thanks for watching CNBC on YouTube.